In this video, guys, we are going to look at, if you're always getting stopped out, try this little experiment. Stay tuned. Hey traders, warm welcome to you. Right, so if you're always getting stopped out in your trading, try this little experiment. Now this I know has worked for others. I've helped others with this before. It's something I did many years ago and it worked well for me. So hopefully it works well for you. So you're in this scenario where you're constantly getting stopped out, or it feels like you're constantly getting stopped out. You know, you're in trades that go your way a little bit, come out, stop you out straight away. And you just see that negative number time and time again on your blotter. A few little green ones now and then, but your equity curve is just falling down and down and down. Now, many people then fall into a bit of despair and go, I just can't make it, I can't be a trader, I'm just losing all the time. And they either go on tilt and end up blowing out their account, or they kind of back off a bit, dabble at it, and the account just kind of erodes down to almost nothing. If that's you, maybe this is time to do something like this. This isn't drastic, this isn't that risky, but it gives you valuable information. So the experiment is this. When you normally take a trade, and let's say you've gone long at this level here, right? You've gone on a little breakout, whatever the strategy may be, it's irrelevant. It's come down and you've been stopped out here. Bang, you're out of the trade. And you've had this multiple times. Very often after that, you will then go and look for another trade. So let's say you've been stopped out in Euro USD, you'll go and look at Euro JPY, you're going to look at GBP USD. Maybe you'll take a couple more trades on that out of annoyance, but ultimately most of the time we kind of forget it, we move on to the next thing, and we tend to not necessarily forget the chart so much, but we tend to reset our feelings on it, and we tend to go, right, okay, I'll take another trade on it. We tend to just completely reimagine what we've seen, because human nature is we look at something objectively again and we forget what's happened, even though we probably got stopped out yesterday, or even though this chart may well be something that we're not looking at, we're looking at something else. The point is if this is happening, try to take all your trades from now on with the smallest size possible. So whatever you're trading, whether you're trading in lots, whether you're trading in spread betting, pounds per point, CFDs, whatever it may be, go to the smallest size possible and take the trade, but do not put in a stop. Put in an emergency stop if you want to, i.e. something that doesn't devastate your account massively if there's some news. But of course, you know that you're always open to kind of news like we had in the Swiss National Bank. Something might come out dramatically anyway and gap through your stop, so you recognize that risk if you're placing a trade anyway. But the idea of this, guys, is to take a trade and have it such a small position. You can have an emergency stop if you like, but the idea is that even in the biggest move would never do much damage to your account, but enough that it's more than just a demo so that you can see what's gone on. Now, once you've done this, you jot down your stop that you would normally have, in this case here, if you were trading with your normal size, and you do your normal due diligence and have the trade run. Now, when the trade has stopped you out under normal circumstances, it won't have, because you don't actually have a stop, but your theoretical stop if you're trading big size, or normal size should I say, write that down. But now, because you're still in the trade, albeit very small, you will track what's gone on. And so what you can do is you can say, right, let's say you're trading for a 3-day hold time. That's your normal trading hold time, or 3-hour hold time, whatever the number may be. If you hold your trade for double that, so you hold it for 6 days or you hold it for 6 hours if your average is normally 3. So what you do is, if you've been stopped out, you print off your chart and go, right, I would have been stopped. Now what you do is you start the clock and go, okay, I'm going to hold it for another 3 days, this very small position, and I'm going to see what happens to the trade. And then I'm going to print off that chart and I'm going to put them in a folder, and I'm going to then look at them when I have at least 10 trades. So you've got 10 trades, and what you're going to see here is what would happen, what's happened normally, i.e. with your normal stop. And what happens if you don't use a stop? Now, the point of don't using a stop, apart from a catastrophe stop, if you want to, that's why we're trading very small size, no damage here, only damage done here. The idea of this is we're getting valuable information, because what you may well find, and actually this is super common, guys, is that you are trading okay, but your stop is just too tight. And that may well be because your entry is a little bit too early. It may well be because the stop is too tight. Maybe some adjustment needs to be done somewhere. You might have the actual direction of the market right. You might be just a few days early. You might be a bit early on price. So many things. And you may not see that actually 6 days later, this is the outcome. all you see, because we just get so blinded by the loss, oh, I got stopped out, and you look at the next chart, you might see that as you're flicking through and go, oh, I missed that, oh, I should have got on that, then you don't look at it in the same way. Whereas if you're in the trade and you're saying, right, I'm going to hold it for X days. It's important that it's a day thing, a time thing, rather than a price thing, because you want to see what would happen, what has happened. Now, of course, you might see that actually it just always does this, you know, and you're always getting stopped out and actually you're in a good stop, in which case you know what to address. You know that the stop is actually helping you, but your actual thesis is incorrect. And the key point to this, guys, this is very, very important, is that it identifies where you should put your focus on improvement. Because at the moment, when you're getting stopped out, you don't know what it is. Am I just bad at getting the market direction? Am I bad at my stop position? Am I bad at my entry? What needs improvement? You don't know where to start. And of course, you can start on the wrong one, and by that time, you've got no money left in your account. Whereas doing this helps you see precisely what the problem is. That's why you get 10 trades, so you can see if there's a pattern. More is better, but 10 is a good start, depending on how big your time frame is. And you can say, hey, look, there's a pattern here, and the pattern is that actually, if I'd held all these trades an extra 3 days, I'd be profitable. And then you go, bang, a light bulb goes off. And you go, well, all I need to tweak is this part of the trade. I'm good at getting the direction. I'm just a little bit early. So do I now need to be a little bit later with my trade? Do I need to put a limit under where I think I want to buy? Do I need to widen my stop? So many different buttons you can tweak and knobs that you can twist to make those changes. But having that information really, really helps you. Because I know what it's like, guys, you get stopped, you get stopped, you get stopped, you get stopped. You're like, I don't know, I just can't do this, and everything's stopped now. You're flicking around from one thing to the other, just desperate for a green trade, and you just never make any progress. And it's understandable, because you just don't know what's going on. So try this. Very, very small size. That's the key. The point is you don't care what's going to happen, but you care enough that you've got some skin in the game. So you wait for the other 3 days or 3 hours or whatever time frame you've got, so that you can analyze it. Because the thing is, when we're not in the trade, we don't analyze it. We look for the next trade, the next trade. Now, you're going to have some discipline with this. It means that you're going to have to accept the fact you're not going to make any meaningful money on the trades you're right. Well, you never know, you might but you're not doing that. You're doing this for data purposes. You've got to treat it like a normal trade. Put your pretend stop in a normal position that you normally would. Print off the chart, have the discipline to then hold that for the next 3 days, print off that chart and then examine them. And you might find that there's some really useful pattern that you can go, that is the one reason why I keep getting stopped out or keep making losing trades. And it's not because I'm a bad trader. It's not because I can't get the direction right. It's not because of all these things. It's because of this. And a very quick story, guys, before I go. I did a similar thing many, many years ago when I was trading the Dow, and I had a fixed stop loss, and I kept getting stopped. And I analyzed this. I did exactly this scenario. I analyzed it. I looked, I saw what was going on, and I realized that, hey, if I just widen my stop by 20% of what it was, then all of a sudden it would change the game. And that's exactly what I did, and it changed things dramatically. I was just a little bit out of sync, just a little bit too tight with my stops. This is more of a scalping thing, or more of a day trading / scalping thing. And just making that small adjustment made the world of difference, And so you can do this too. Have a look at it. Understand that you've still got some risk, of course, because you've got some money on the table, but it's worth it, especially if you're very, 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 very small size, to get the information to help you move forward. If you like this kind of stuff, thumbs up appreciated. And don't forget to check out the channel sponsor, guys. The link's in the description below. And welcome your comments. What do you think about this sort of stuff? Take care. Bye-bye.